Hello all. Today's topic for discussion is about profit and loss appropriation account adjustments which will come along with the statement of profit and loss account in company account. Okay, so we have already seen how to prepare a statement of profit and loss account, and in some cases there will be questions based on which you will have to prepare and separate adjustment accounts which is known as profit and loss appropriation account. So in some cases like interim dividends or any kind of reserve or transfer to any kind of other reserves in an organizations, there we cannot transfer that amount directly to a statement of profit and loss account, but it can be adjusted somewhere else which is related to profit and loss account. That kind of account statement is known as profit and loss appropriation account. So this is the format of preparing a profit and loss appropriation account, that is in debit side and credit side. These are the items which will come. I'll discuss it one by one. First thing what you have to do is you have to transfer the last year's profit balance. Okay, whatever profit is there for the last year, that profit balance will be brought down to the profit and loss account. And there will also be a current year profit after making certain kind of provisions. That kind of taxations or provisions which is done, and after the doing all this adjustment, the profit what you are getting will be the current year's profit. That current year's profit is also transferred or brought down to the profit and loss account credit side. So you give it as by current year profit and by last year's profit balance brought down. Okay, the next thing what is to be considered very important is the general reserve. So whatever amount you are transferring to a reserve, it may be simply general reserve or it may be a reserve for a specific purpose. Say for example, if you are transferring some amount to a taxation reserve, or you're transferring some amount to an allowance reserve, or you're transferring it to some other kind of reserve like gratuity reserve. So whatever the reserve may be, whatever amount you're transferring to, that amount will be given here as to transfer to that specific reserve. Okay, so just remember, whenever you see a transfer to certain specific kind of reserve, that amount will be shown here in the debit side of profit and loss appropriation account. Okay, and then to income tax for last year which is not provided. So income tax provisions which is not yet provided will be transferred to this profit and loss appropriation account. Next item is very important, that is provision for dividend. So dividend is something which you have proposed last year and or you are making some provision for this year. So that kind of dividend, whatever dividend it may be, it will be transferred to the debit side of the profit and loss appropriation account. So for example, if you are proposing dividend for preference shareholders, or you are proposing, say for example, it is preference dividend and you are also proposing a equity dividend. In that case, you will find or you will give separate amount for these two dividends. And it will be shown separately. Okay, so for example, if in your balance sheet there is a preference share as well as equity share, and you are proposing dividend for both preference as well as equity, so in that case you will show all those dividends separately. And also interim dividend will also be shown separately. Interim dividend is a kind of dividend which is not issued at the annual general meeting or decided at the annual general meeting. It will be a kind of dividend which will be declared in between two annual or in the mid year or in middle of time it will be given. So interim dividend is such a dividend which is paid between two annual general meeting or in the middle of the year. Okay, so if you find any provisions made for interim dividend, that is also to be transferred to the debit side of profit and loss appropriation account. And very important thing which is to be noted after giving your dividend amount is that whenever you are providing dividend, there should be a corporate dividend tax which is of 10%, that is importantly or particularly provided for the amount what you have stated. Okay, so whatever amount you have stated or which you have given as a proposed dividend, for that particular amount you have to provide a corporate dividend tax of 10% to that amount. Say for example, if you're providing provision for dividend 50,000, for that 50,000 you will have to provide 10% of dividend tax or corporate dividend tax. This corporate dividend tax is charged on all the dividend paid after 1997. So after 1997, whatever dividend amount you're paying, for that particular amount, it is very important to provide corporate dividend tax which is of 10%, as well as there is also a surcharge of 5%, but it is always ignored because you are providing current year profit and that profit keeps on changing year after year. So just remind or just remember that whenever you are providing a provision for dividend or your proposed dividend amount is paid, for that amount you are providing 10% of corporate tax or corporate dividend tax, which is 10%. Okay, just remember that. Now I have a question for you in which we will discuss what all kind of items will come in a profit and loss appropriation account. I think we can go to the question. Okay. And yeah, to surplus carried to balance sheet is an item which will be stated as after making all these adjustments, whatever amount you're getting here, that amount is stated as to surplus. Okay, and this side, if you're transferring amount from general reserve, that amount will be shown in the credit side. And if there is no such longer required, any income tax which is not longer required, that kind of items will be shown here as well. Okay, we will see and you will understand it better when you're doing a problem. So the problem goes like this. Lucinar Limited has rupees 21 lakh profit on 31/3/1998. After making provisions for depreciation and taxation, it is rupees 1,30,400. Profit was brought forward from the last year. So whatever profit is bought forward from the last year is 1,30,400, and for this year you have that Lucinar Limited has a profit of 21 lakh. Okay, following the recommendations were made by the directors of the company to appropriate the profit. So these are the adjustments which is to be made in the profit and loss appropriation account. First thing is to transfer rupees 6,30,000 to general reserve. So as you know, it will come in the debit side of the profit and loss account or profit and loss appropriation account. Okay, and to pay rupees 85,000 as ex gratia bonus to employees of the company. So this is also ex gratia bonus is something which is similar to a proposed bonus. So you are going to pay some proposed bonus to the employees, that is 85,000. So that is also an item which is to be shown in the debit side of profit and loss appropriation account. Now you can see to declare dividend at 5% on equity. So whatever the equity shares is there, in that equity shares you're going to provide 5% dividend. We will see what is the equity share in the coming points. Okay, so to transfer 45,000 to staff gratuity reserve. So this is also a kind of reserve. So, you know, it will be transferred in the debit side. 50,000 to development rebate reserve and 90,000 to deferred taxation reserve. So all these reserves are coming under the debit side. Okay, the company capital consisted of 1 lakh equity shares of rupees 10 each fully paid. So for 1 lakh equity shares, rupees 10, it is fully paid. For the total amount of equity shares will be 10 lakh. For this 10 lakh only, you're going to provide this dividend of 5%. Okay, and then for the year ending 31/3/98, the directors transfer rupees 40,000 to dividend equalization reserve. This is also another kind of reserve. So where will you post it? Yes, in the debit side. But rupees 30,000 to debenture redemption fund account. So debenture redemption fund account, they're transferring it to the particular fund. So it is not transferred from, you are transferring it to. So it is also an item which is to be posted in the debit side of the profit and loss appropriation account. Now we are supposed to prepare profit and loss appropriation account for this year. Okay, so I have posted the particulars already. Now the solution is to prepare P and L appropriation account for the year ended on 31st March 98. Okay, now I have the particulars and I have the adjustments which is to be made. So first adjustment, what you're going to do is you're transferring the current year's profit as well as the profit which is brought forward from the last year. That is to be posted in the credit side, as you know. So we are going to write by balance. That is, by balance brought down will be the last year's profit. So the amount for last year's profit is 1,30,400. Okay. Next item is the current year's profit. So by net profit for the year. Okay. For the year it is 21 lakh. So the credit side items, whatever you're going to post is only this much. Now let us see to the debit side. First item is the transfer to general reserve. Okay, you can see it here in the question. See, transfer to general reserve is there. Transfer to or proposed bonus is there. Declared dividend is there. Staff gratuity reserve. All those kind of reserves are there. So I'm just going to write to transfer to general reserve. General reserve is GR. The amount is 6,30,000. Okay. And to proposed dividend. Okay. Proposed bonus. Okay. Proposed bonus. See, 85,000 is the ex gratia bonus, which is treated as proposed bonus. Transferred that. Next item, third item is dividend. Is it? So you're going to give the proposed dividend. Proposed dividend. How are you going to give it? 5% on equity shares. So equity shares is 1 into 10 or 1 lakh into 10, which is you're going to provide. You want, okay, let us write it like this. 1 lakh into rupees 10 each is the equity shares. So that is equal to 10 lakh. Okay. So 10 lakh is your total equity shares amount. Now what you're going to do is into 5 divided by 100. What is that 5 divided by 100? 5 divided by 100 is this 5% on equity shares. So when you do that, the amount what you're going to get is 50,000. Okay, so 50,000 is your proposed dividend. So as I told you, whenever there is proposed dividend given in the question, whatever kind of dividend is given in the question, you are supposed to provide a corporate dividend tax. So just after, remember that just immediately after providing the dividend, you are supposed to give the corporate dividend tax 10% on. what? On the amount of dividend on 50,000. So when you give 50,000 into 10%, the amount what you're getting is 5,000. That will be provided as corporate dividend tax. Okay, now you have provided the dividend tax after declaring it. Now you can provide staff gratuity reserve. So to staff gratuity reserve, the amount of staff gratuity reserve is 45,000. Yes. Okay. And after that, it is to development rebate reserve, which is 50,000. After that, you can give to deferred tax reserve, which is 90,000. Sorry, it's 90,000. Okay, and okay, after deferred tax reserve, what is to be provided is you have the directors transferred rupees 40,000 to dividend equalization reserve in the question, isn't it? So just give the amount to dividend equalization reserve, which is 40,000. Okay, where did I take this amount from? See, for the year ending, there are directors transfer rupees 40,000 to dividend equalization reserve and 30,000 to debenture redemption fund account. So those two items are to be posted in the debit side as well, as I told you. So we have passed dividend equalization reserve. Now we are going to pass to what? Debenture redemption fund. Okay, so debenture redemption fund 30,000 is also to be provided. So these are the items which is to be provided in the debit as well as the credit balance. So when you do the calculation, the credit side is always exceeding. So the amount what you're getting in credit side is 22,30,000. Hope you're getting the same. 30,400. So 30,400. So in order to equalize that, whatever amount you're getting in this side will be treated as the surplus. To surplus carried forward to balance sheet. Okay. So whatever amount you're getting as a balance will be carried forward to the balance sheet. So when you do all the calculations, the amount what you will get is 12,05,000, that is 12,05,400. How did you get that? 22,30,400 minus the sum of all these items. So this will be the surplus which will be carried forward to the balance sheet. So the debit side as well, you will write the total of 22,30,400. So always remember to provide this corporate dividend tax, which is the most important item while preparing profit and loss appropriation account. So this is all what you have to do in a profit and loss appropriation account. So just remember, whenever there is some kind of provisions for taxation or something like that, you will have to do it. For example, the previous sum, you have seen an item of interim dividend. So that kind of things, after finding your profit and loss in the statement of profit and loss account, you can take it towards the profit and loss appropriation account. So we'll discuss it while doing the next sums. So thank you for listening. Thank you.